cool guys. I'm gonna go ahead and get started in a quick PowerPoint presentation I put together. So this is just gonna cover like the basics, like what is harmonic trade-in, what is the Fibonacci ratio, where is the 618 derived from, and a bunch of the other fib retracements that you're gonna use to set up on your Fibonacci retracement tool that we'll go into later. We'll get you set up on trade-in view with add in everything to your favorites, so you have a little taskbar that you can choose from with your harmonic pattern, your Fibonacci retracement tool, and a couple other tricks that I use. I'll show you where the magnet is, or you can just hold control on trade-in view to go ahead and use the magnet to pin to your harmonics to a swing low or swing high. But this is just going to be a complete overview for some of the basics. There's going to be a lot more detailed ways that you can trade harmonics to really perfect them and get better at them. I'm still improving every day. We have Bird Dog in here as well that's going to go ahead and chime in and help out a little bit with some of his knowledge, and I appreciate that. But all of this is just for educational purposes, of course, and none of it's financial advice. So we'll go ahead and get started. So just for what an introduction is to harmonic trade-in, it's a methodology, right? So we're gonna use specific price patterns. So these are gonna be like repeatable patterns that are gonna happen over and over again and have happened over and over again and been back tested by Scott Carney and a lot others in the financial markets. You can trade harmonic patterns not just in crypto, but they happen a lot in stocks. They're actually more accurate in stocks because you have more liquidity there usually. You can use it in FX trading, but they're going to use specific price patterns with specific Fibonacci retracements in like a wave structure to kind of predict where price is. When you do have completed harmonic patterns, you want to trade the completed patterns. It's going to identify a highly probable reversal point in the financial markets, and then based on the principle that these patterns repeat over and over again. So the reason you trade these is because they have repeated over and over again with a high success rate. So you always want to try to find an edge in the market. So if you can find patterns that repeat over and over again, for example, people use the inverse head and shoulders and the bear flag, bull flag, all those. Think of this as another pattern that you can use inside the financial markets to find reversal points or continuation patterns. So first I was just going to start with what is the Fibonacci ratio. So the Fibonacci ratio is this guy named Fibonacci, he created this ratio, and it's very simple. So it uses a formulary that goes 0 plus 1. So you take these and you add those together and you get the next number in the Fibonacci ratio. So 0 plus 1 equals 1, so that's the next one. Then you take 1 plus 1, and that's going to equal 2, so that's your next number. Then you do 1 plus 2, it's going to equal 3. And you can actually see this down here, how this just progresses basically to infinity. So for example, 55 plus 89, you get 144. And where the Fibonacci or the golden ratio is derived from is if you take these numbers and divide it by the next number. So if you take, for example, I took, should be 34 in here, but 34 divided by 55, you're going to get about 618. If you take the next number and then divide it by the next number, you're going to get about a 618. And after about the 8th or so number past this, it gets closer and closer to the 618 if you do that. And then vice versa, if you do the inverse of that, if you take the larger number and divide it by the previous number, you're going to get the 1618. So those are going to be your two Fibonacci numbers that everything's pretty much derived from. So you have your primary ratio, your 618, and then your primary projection, which is 1618. This is basically everything that they use in harmonics is derived from these numbers somehow. And if not, there's a couple complementary derived ratios. So to start off with, the 786 is a very important one in the Gartley structure. That is gotten by taking the square root of the 618. And then the 886, which you find a lot in the bat structures, shark structures, that's going to be the square root of the 786. So you square root the 618, you get the 786, you square root that again, and that's how you get your 886 number. If you take the fourth square root of the 1618, you're going to get 1.13, and then also the square root of 1272. So, and then basically you take just, instead of the 4 square root, if you just take the square root of the 1618, that's your 1272. That's going to be your butterfly structure projection. And then the complementary derived ratios, you have, if you take 1 and you minus the 618, that's where you get your 382 from. You have your 0.5, that's just half, that's just basic. 707 number, if you take that and square root it, you get your 707. And then you have your 1414, that's square root of 2. And then you have a couple others here. So these aren't going to be used as much. I mean, your 2618 obviously is pretty important. That's going to be some of your maximum extensions, and I'll go over those later. And then we got pi and 3618. So if you want, you can take a screenshot of this. I'll post the cheat sheet as well for you later. These are all the Fibonacci ratios that you should be using on your Fibonacci tool. So if you want to go to settings with that, I can go over that later. You'll go into trading view, you go to the Fibonacci retracement tool, and then you want to make sure each of these are added onto your tool. So you have each of these ratios in there. I also use the 236 in here if you want to add that, 0.236. And add all of these to your tool, because this is what you're going to use ultimately when you're using your Fib tool to find Fibonacci areas and retracements. So take a screenshot of that if you can. If not, we'll go back to it and I can show you what my tool looks like. So one of the most important things with finding harmonics is finding your X point, where you're going to anchor the X point. So it's a 5 wavelength, so you have your X, an A, a B, a C, and then finally a D usually. Finding the swing highs and the swing lows is going to be the most important part. So if you're not too familiar with these, I suggest to start off with is watching some YouTube videos on these. But just identifying what a swing low is your lowest price on an entire swing move down or an impulse move down like this. So this is going to be your swing low here. Here's another example, a swing low here. And then you also have a swing low here, your lowest price. And then you can also go into your swing highs. So you have a swing high over here, and you have another swing high over here for your highs. These are going to ultimately be your anchor points of your harmonics. You don't want to take an X, anchor it to, like, I don't know, like this area. When you have your swing low here, it's cheating, it's not going to work, you're only cheating yourself. You want to make sure it's on the swing low, and then your next A point has to be on the swing high here. You can't go X and then put an A like right here to make your ratio fit. It just doesn't work like that. And you want to, with these swing highs and swing lows, this is where you're going to ultimately take and pull your Fibonacci retracement tools as well. So to find this, you would start your Fib tool here, take it from the swing low up to the swing high, and then you could find your retracement levels that would go down, and I'll show that on the next slide too. Cool. So this is an example. We have a swing low here, we have a swing high here, so we started the harmonic down here with your X. So you took the tool, you pinned it to the lowest swing low here, and then you went up and you posted it as swing high. Same with the Fibonacci tool, the retracement tool here. You started here and you posted it up here to your swing high after your swing low. And then you'll get your retracements. So you can think of all these as percentages or Fibonacci ratios. Like a 382 is just a 38.2%. 0.5 is 50%. 618, that's a 61.8%. And then this is an example of a bullish BAP structure, which we can go over. I'm going to send you the sheet with all the ratios and different harmonics. But this structure uses a initial move from X to A. So if you count this as 100%, right? From X to A, is that 100%? Your B point came down 50% of this 100% move, and that's where you get this 0.5 here. And you can actually see on your Fibonacci tool over here that you got a 0.5 retracement before reversing back up. And then you can actually also see, so if you have your X to A here, since you have a 0.5 here, your next point is going to be, since it's a BAT structure, which you can use the cheat sheet on, if you have a 0.5, what you're looking for next is your 886. So if you look to the right, after you have your fib tool pinned from swing low to swing high of the entire harmonic, you look to the right, you have your 886, and that's where the bat structure completed at, and that is your PRZ, where price potentially can reverse, your potential reversal zone. And I'll go over that later. I have a slide on that we can cover too. Does anybody have any questions about these so far on how to identify the swing lows, swing highs, or how to pull the harmonic tool or the fib tool? Because we can go over those later, but if you have any questions, just let me know. Here's a quick video. Let me know if you guys can hear the sound. I'm going to start it.
Here's how you draw Fibonacci levels as a trader. Find a bull, select the Fibonacci retracement tool. Next, for a bull, draw Fibonacci levels as a trader. First, find a bullish or bearish
Let me
impulsive
see if I can
select
do
the
this real quick.
Fibonacci retracement tool. Next, for a bullish impulsive move,
I think
you
my
connect the
headphones
first
died,
point to
that's
the
why.
low, and then the second point to the high, and then you extend to the right. And for bearish impulsive moves, it's the opposite, where you connect the first point to the high, and then the second point to the low. When the price retraces, then some of these Fibonacci levels could act as mini zones of support and resistance. They could also be used as better
Alright, so if
trade
you guys
entries within
if you
a
guys
trend,
said
or even
anything
as take profit.
in the last few minutes, it's because my headphones died. So we'll just play this
How you
again.
draw Fibonacci.
Play it from the beginning.
You draw Fibonacci levels as a trader. First, find a bullish or bearish impulsive move. Select the Fibonacci retracement tool. Next, for a bullish impulsive move, you connect the first point to the low, and then the second point to the high, and then you extend to the right. And for bearish impulsive moves, it's the opposite, where you connect the first point to the high, and then the second point to the low. When the price retraces, then some of these Fibonacci levels could act as mini zones of support and resistance. They could also be used as better trade entries within a trend, or even as take profit levels if it's a counter trend trade. If these are drawn in a strong trend, then a 23.6, 38.2, or 50% retracement levels are more likely to be tested. And if these are drawn in a slower trend, like a channel or a ranging market, then the 61.8, 78.6, or 88.6 levels are more likely to be tested. And for some technical traders, the 61.8 level is the most popular, as it represents the golden mean ratio in Fibonacci.
So that's just a quick snippet of where to post it and everything. I'll post the video. There's a lot more in-depth videos of Fibonacci tools that we can go over. But that's just the basics. So this is going to be all the patterns that you're going to have. So you're going to have a bunch of patterns. The most common that you'll see are going to be the Gartley pattern, bat pattern, butterfly, crab, and the shark pattern. Those would probably the most common patterns that I see. The bat and the Gartley being the two main ones that I typically see, and then the butterfly as well. Those three are typically what I like to trade the most. Crabs are good trades as well, and then sharks can be too, but the Gartley, the bat, the butterfly are my three favorite. The Gartley being my most. So there's going to be a bullish and a bearish harmonic. So each of these, I have them lined up with all bullish and then all bearish. They're each going to have the inverse, and it's just the same exact pattern, just flipped upside down. The ones that look like an M shape, those are your bullish harmonics. The ones that look like a W shape, those are your bearish harmonics. And the harmonics, you always want to take the trade at the D. So if it goes up, down, up, and then all the way down to your D, the D is your potential reversal zone. That's where you want to enter or look for an entry for a trade off that D right here. So that's where you would enter it, and that's why it's a bullish harmonic. Even though, say I'll post the bullish harmonic, the X, the A, the B is complete, and then it's at the C, and I have the D down here, it's a bullish harmonic. It doesn't mean take the short from the C down in the D. It means if it does come to that D point, then that's where you want to take that trade for the long. So these are going to be all the harmonic patterns. I have a couple cheat sheets of these. I'll link them in the VC text after this. But these are going to be all of the patterns that you're going to use. I'll go over identification too, of trying to figure out which pattern is that you want to use, because it's very specific. If you have in between a 382 or a 0.5, it's typically going to be your bat pattern, which you'll look at the cheat sheet and you get your X, your A, and your B. If you get anywhere between your 382 and your 0.5, typically you already know what your D projection is going to be. It's going to be an 886. And then if you look at your Gartley pattern, over here, you got X, A, B, C, D. If you're XAB, if you get a 61.8% retracement ratio on there, then you look, you get your next projection for your D over here is going to be a 786. So those are just things to write down. You can, for notes for this, what I wrote down was if you get between a 382 and a 0.5, it's going to be your 886. If you have a 618, then it's going to be a 786. If you have a 786, which is your butterfly, XAB 786 retracement, that's your butterfly. Then you're looking for your 1272 for your X to D. I'll cover that in a second. Just some stuff to consider with harmonic trading here. It does require a lot of patience. You got to trust the system. You can't look at it and be like, oh, it's almost to that D point, it's almost to the entry, like, let me get in now. Like, you want to trust the system. You want to wait for the harmonic completion and take the trade at the harmonic completion. And obviously it's not foolproof. There's always going to be risk of loss. No trading plan is foolproof. If it was foolproof, everybody that does this would be retired by now. And then make sure you use proper risk management practices as well. We posted a couple trade and risk calculators that you can use based on your account value, how much you want to risk or you're willing to risk if you take a trade, based on what the stop loss has to be based on the harmonic pattern. So if you have to have a stop loss 8% down on a pattern, you're not going to go taking your entire portfolio and going 20x on it, because you'll get liquidated in a 5% move. So you want to make sure you really focus on proper risk management, seeing what your account value is, how much you're willing to risk per trade. Ideally, you want to keep that very low and then go from there. There's 3 stages to our harmonic trading pattern, and just I think there's more personally, but the basic ones are going to be your identification first. So once you get your XAB, that's when you start to identify, okay, there's a potential pattern forming here. Now we have to see where that C leg is going to go, and then you got to wait for the pattern to complete at the D point. Once the pattern does complete at that D point, that's where you want to check, and you want to see, okay, is price looking like it's going to start to reverse? Do you have bullish or bearish divergences there? Is there an order block that lines up the completion of this harmonic at the D point? And then you can go into your smaller time frames and look for entries. That's your trade execution phase. So this is where you really want to look and start to look for an entry on this trade. You don't have to always blindly enter just at the D point completion. You want to make sure that price does look like it's starting to reverse at that area. Or you can just take a strict entry there as well, but you got to make sure you know where proper stop loss placements of these are too. And we can cover that in a future video. And then you have your trade management. Once you're entered into the trade, you want to be able to manage that trade to see when price, okay, maybe it did reverse from here, right? You're in the trade, you're in profits. But once you see it start to come back to your entry, you want to be able to see, okay, how am I going to manage this trade? You don't want to just let it come back and just stop you out after you were in profits here. So trade management is a very big part of this too. And there's a couple ways to go over trade management with harmonics. There's your initial tap of the PRZ, or the potential reversal zone. And in that PRZ, if you do come up, you want to draw like a trend line. If you lose that trend line, you want to get out, secure those profits, and maybe wait for it to touch the potential reversal zone again, and then get back in. And that's going to be a more advanced but proper way to trade the harmonics. Is you have your type 1 initial reaction, you get your type 2 reversal, or your type 2 return to the potential reversal zone, and then you get your type 2 actual move, the real move. So trade identification. This is just some snippets I pulled from Scott Carney's book that we can link the book for you too. I want you to go make sure that you read the first book. It is going to help a lot, man, if you just go through it and read it, because there's going to be bits and pieces that you'll pick up And it's a lot more in depth than this quick video that we're going to be going over. But regardless of what type of trading system is utilized, the initial step is always trying to identify a potential opportunity. So no matter what strategy you have, you should have a stage where you identify a trade. You don't just want to blindly enter a trade. So by using harmonic patterns, you can actually visualize these wave structures from repetitive price patterns that happen over and over again in the financial markets, and have a whole trade set up, man. You can have, all right, cool, here's your potential reversal zone. This is where I think price is going to reverse. So that looks like it would be my entry. Stop loss, you can keep your stop losses below the X of that harmonic, or wherever the proper stop loss of that harmonic is. We can post a couple cheat sheets for that too. And then just making sure you identify the trade. So this is not just blindly entering and exiting based on emotions. This is just having a proper strategy of when to get in the trade and what looks good for a trade. Then you have your execution. So we just went over the execution, but this one's after you already have your trade identified. This is actually executing on that trade. You can have the best person in the world at charting, but if they execute the trade and say they over leverage or they over position themselves and it starts to go against them, maybe they exit out of the trade, right? And then they watch it reverse from that PRZ or potential reversal zone. Then they want to chase it and get back in. So this is really important. You want to make sure you work on your execution. You want to make sure you work on your emotions during this session as well, during this area of the harmonic trading, because harmonics they move to extremes in the market, right? So they come off of, like, when you have a completed harmonic, that was just one of the biggest areas that it either nuked or pumped, and you're looking for a reversal. That's why it's called the potential reversal zone. You look for reversals in the markets with these. So you'll get a lot of hate. I've gotten a lot of hate on posting a bullish harmonic after everything's been nuking 20%, and people are like, oh dude, it's gonna keep going down, blah blah blah, and then you watch the harmonic play out and actually reverse. So there will be a lot in this execution that over time you start to master and just trust your system with it. And obviously it's not foolproof, but this is an important one. And then trade management. So after you have your execution and everything decided, you got to have your considerations involved in the trading process. And if the trade was executed, you got to manage it. You can't just enter the trade and walk away. Like, you want to make sure you manage the trade, but not over manage it, if that makes sense. You want to make sure that it's still uptrending. You're forming higher highs, higher lows, and once you do break market structure, you can go ahead and take profit and exit the trade early if you need to, if it did not get to your profit zones. So this is going to be going over what your PRZ is, or your potential reversal zone. So, and I'll actually blow this up and we can go into trading view right after this and go over this section too. But what is your PRZ? So you have a completed harmonic pattern here, right? This is a bullish bat structure. You have your swing high, your swing low, and then your D point completes here. That D point where you have your 886 ratio, that's going to be your potential reversal zone. This is the price that you want to see the harmonic start to reverse at. So for example here, I think this is a FTM, the bullish bat structure. You basically tagged the 886 here and it was almost the exact bottom of this. So that's your potential reversal zone. It's a high probable area for reversal based on the completion of the harmonic pattern. This also represents a critical area where the buying and selling flow is potentially changing. So this is where, if it's going down a lot like this is where sellers start to get exhausted in this area. And there's a bunch of other techniques to use on top of just having your completed harmonic PRZ. You can start adding in fair value gaps there, order blocks, divergences, and everything to watch as maybe price is slowing down here and looking to reverse. Sellers are getting exhausted. Maybe buyers are stepping in to look for that potential reversal. So that's basically just a quick presentation that I have just for some of the basics. I'll go into actually opening up TradingView here now and pin in points and harmonics just to go over how to identify some swing highs, swing lows, and then we'll have Bird Dog maybe throw a couple of his 2 cents in here as well. So let me go ahead and I'm gonna pause this video and then I'll go ahead and pull up TradingView and get started. Alright, cool, so I'll go ahead and get this started here. So just for an example, some things that you're gonna wanna do and set up first is you wanna go over here and find your Fibonacci tool. Post it on a chart. Mine's gonna look a little different from default settings here. I have a bunch actually saved, but what you want to do is you want to go ahead and add all of these Fibonacci ratios in here. You can take a screenshot of this and adjust it however you want. Use whatever color code you want. I just use all one color, all black. I have prices on here and I have the levels. You can actually put it to percents if you want, so it'll show percentage moves instead of the fib ratios. And then so just make sure that you add all of these. These are the fib ratios that you want to use. I have a 0.13 in here too, only because I do see this get respected. It's not actually one that you have in here. Your 1.13 is, but I do watch it get respected on smaller time frames, so I have that one added extra. And you can extend it however you want. You can have it whole screen. I just extend it to the right here. So it extends it all the way to the right, so it's always on the right side of my screen. And so that's just the basics with this. And then when you use this, how you identify swing highs, swing lows, we went over that earlier. So you're gonna have right here, this is gonna be your swing low, this is your lowest point, swing high. I actually rewound this a little bit so it can just show you how this develops. And then if you want to pin this to the bottom here, so you can either hold control. If you hold control while you have your, oh, hold on, let me go over this first. If you click this, your X, A, B, C, D pattern, that's going to be your other one. Just go ahead and throw a favorite on that and it'll pull it up to your toolbar here on TradingView. And to turn this toolbar on and off, you can actually go down here to the star and click this, and that'll turn it on and off, so you don't have to go over to the left every time. You'll just have it here, and you can drag this to wherever you want it. But I always have mine added up here. And then you can actually hold control if you want to pin it to an exact bottom, or you can come over to this magnet, turn the magnet on, and that's going to actually allow you to help pin it to the bottom. So when you first start your harmonics, you always want to find the swing high, swing low. This is a large time frame just to show you an example. But this is your swing low, here's your swing high. So your X to A. And then you got to go down to your swing low for this price. And you have a 0.5 and it's within the range that we'll go over. And I'll send a snippet from the book for this too. Since you got your 0.5, then with the bat structure, you can actually have anywhere between a 382 here for this leg all the way up to an 886 for your C. So this is a pretty big range here. This isn't where you take the trade on the harmonic pattern at all. This is just part of the identifying the trade. So once you get this initial 0.5 here, once you get your X, your A, and then your B, once you get this initial number here, you can, yes, yeah, exactly. So you can project what your D point's going to be. So since you have a 0.5, as long as this is anywhere between a 382 and a 886 here, so we topped out right around a 786, since you have this, your projection is your 886. This is where you want to see price reverse. Only thing you're looking at, I mean, that stuff comes second. First it's identifying the harmonic. You have your 0.5 here, you're looking for your 886 down here. And then once you have that completion zone, then you can look left and you can see, okay, does this line up? Is this a support, like a supply line, resistance line? Do you have an order block down here? Like what all adds up around here that you can look for to help have confluence with your trade. You can look for divergences once price starts to come down, see if you are forming divergence. But if you want to go ahead and actually play this now, which is right here, so you can actually play this and see how this played out. It took time, right? But this is your potential reversal zone here. That's where your trade entry would have been. Yep, and another, exactly. So this is, I mean, that's a thing with harmonics too. Doing everything in harmony, having everything line up at the same time together. These are just going to give you potential reversal zones, places where you can take the trades. Let's do another replay on this, right? On Gala. So this is another one that I identified pretty early on this one, and where I started to pick up some spot on this. So let's just do an example here. Say this is price down back in March, February. This is when I started to identify the trade. I posted this trade a while ago, and someone gave me some hate. They're like, what's actionable about this, right? I'm like, this is just I am identifying a trade. I'm not saying it's going down right this second, right? It's in March that I did this, and somebody was like, what's actionable about this trade? And then I'm like, it's just identifying a pattern, having a trade set up, so when price, if it does hit that price, if and when, you can react to it, right? You're already looking for it. So you have your XA, you can come down here, you have your B. So it's plus or minus around 3% or so for your 0.5 here. So you're looking for your 886 again. So you come up, you got your C point, and then you bring this down to your 886. And then you want to make sure all of these line up with the cheat sheet, right? So you have in between your 382, your 0.5, in between a 382 and an 886 for this one. And then this one has to be for a bat pattern in between a 1618 and a 2618. So this one is within that range as well. So this is going to be your potential reversal zone here. And let me actually bring this down. So how you get this 2.533 is actually if you took a fib from the swing low here to this swing high, and then your 618 here. Correct me if I'm wrong, Bird Dog. This is your PRZ. Yep. So this is your potential reversal zone right here. This is where you're looking for to take your trade in, and then this could be identified back here, and I mean you could have identified this back in like mid-February. So if you want to go ahead and actually take this and just play it now, you can see how it did take some time, right? But eventually that's where you would have entered your trade. And you could have gotten, say you would have taken the trade, you would have used proper, just drawn a trend line. As soon as it breaks the trend line, you take your profit, right? As soon as you start to see weakness, and look, you could have had a 25% move on that trade from your entry. If you entered at the 886, you entered, say, in the middle of this PRZ, around a 30%, 25%, 27%. And then you would have exited, and now you're looking for this price to come potentially tap back down in this zone and reverse again. So you would have secured profits here, and you can potentially get back at this zone again. And you can look for smaller harmonics on a lower time frame back down in this area as well, which Gala actually does have another one form in here in your PRZ. Any questions or anything so far? Let me pull up the chat. Dave, can you mute your mic? Thank you. Alright, let's see. Yeah. So I use RSI and I use MACD. So I use these to look for divergences in this area. So I can go over this in another session, or I can cover some of it now. So there's a bunch of different types of divergences, and I can post cheat sheets for those, but here you can actually see you had a divergence form in, you're in the oversold area on RSI on your daily. You were in it here too, and you formed a divergence from here to here. You had a much lower price. RSI is about the same, correct, creating divergence. You have your MACD. Momentum is starting to shift up. You can actually see here how this wave is much deeper of the MACD here than this, but price, so you have a higher low here, we have a lower low in price, so you're creating a divergence here at the harmonic completion zone. So having a divergence line up with your harmonic completion here just gives you more confluence for price to move up from there. Yep, and for those watching the video, I don't know if you're going to be able to actually hear Bird Dog and a couple of these other people chiming in. But basically what he said is it's pretty strong when you do have a divergence on top of a harmonic here. That's usually when you're going to start to see an actual reversal here. So making sure you study up on your divergences too and understanding those. There is an indicator that you can use just to get started to help spot them. It's from... Let's see if I pull this up. Divergence for Many Indicators V4, and it's by Lonesome the Blue, and that's actually posted in the indicator dump section. So if you go into the learn some shit area of the Discord, go down to indicator dump. This indicator is actually in there. There's actually a lot of good indicators that you can pick through and see what you like, what you don't like. But this you can actually turn on if you wanted. Let me put it on real quick. And this can help you spot divergences. I turned off some of the ones. Typically, I usually just use like MACD histogram, RSI, this Doge. And you can wait for confirmation or don't wait for confirmation on these. You can have it only show the last divergence on price, because if not, your charts will look like this. But it'll actually show you where divergences are, and it'll tell you what type of divergences that it's seeing with it too. So here you actually saw you had a divergence here, here to here, divergence. You can see that in RSI as well. So if you see here, divergence here, but bearish divergence. But this is just a good indicator that'll help show you divergences as well as you learn them. All right, so we have your bat. That's going to be the first one that you guys can practice. You can use your cheat sheet and you can practice a lot of them, but your bat you want to have between that 382 for your initial. Once you have a swing low and a swing high indicated, And I'll actually do a bearish one too to show you, so you're not just looking for bullish ones. Once you got that 0.5, this one has to be anywhere between a 382 and an 886. And you can actually just take the cheat sheet, and let me post the cheat sheet to this real quick. But you can take that cheat sheet, and I have two screens. I don't know if you do. You can either print it out, or I actually posted it as my background on my computer. I'll show you which one I use to start. So I use this to start, and I'll get you the clear version of this so you can actually see it, but this has most of the harmonic patterns. I have a good one that I made too that has most of them too. And it shows you if you have your X, your A, and then you get a 50% here for your B, it's a possible, what possible pattern is it? It's a possible bat pattern. If you get the 618, it's a possible Gartley, crab, or shark pattern. Or cipher, if it's a 786, it's a possible butterfly pattern. And you can find that as soon as you have your XAB. But once you have that, then you want to line up and make sure all these other ratios fit in. So you have your cheat sheet, you have your bullish bat here. So anywhere between 382 and 0.5, typically you want it very close to that 382 or very close to that 0.5. It's a much stronger pattern. Then anywhere between your 382 and your 886 for this leg. And then you look here, anywhere between a 1618, 2618 for this leg here. So it's in between those ratios, so you're good to go. And then this needs to be your 886. So that's your bat. And then we'll go into, I know 8 had a pretty good bearish bat pattern that we can go over just in the past. I actually think I have it marked off. So this is an old trade that I did take. So we had a swing high over here. This is a wick up. This is a high area. So we had this, and we had pretty much a 0.5 here. So as soon as I saw this, when price was down in this area and we formed this C leg, that's when I noticed, I was like, okay, we could go all the way up to your, it's an old chart, so let me get this all fixed for you. We could go all the way up to this 886 up here. So for example, price was looking like this when I was identifying this trade. So this is what price looked like. You had your 0.5 retracement pretty much in between your 382 and your 886 here. So you already had your D, your 886 projection up here. So this is what I was looking for the trade. I was looking for price to come up to here to reverse from here. So you can actually just click and play this. So this is the same exact bat structure. This is just a bearish bat structure. It's W-shaped, so that's going to be bearish. And that's when you look for the reversal at the D point up here. So this is where you would take a short when you have that W shape. And you can actually just play it and see how when price hit that, it actually came and nuked all the way down. Let me pull up the chat real quick. Has this helped so far, guys? You're welcome. You have a little bit of an echo, so I caught like half of that. I don't know if it was the mic or... Okay, I can actually hear you now, so. Perfect, but yeah, this is just basics to get you started, but I would say the biggest thing that helped me is just taking that cheat sheet and posting it and having that cheat sheet printed out or as a computer background on one of your screens, have everything closed out, have a trading view open on the other, and just practice finding these ratios. And you can practice on the lower time frames. Like you can check a 5 minute, because price is fractal, man. You'll have harmonics pop up on lower time frames too, and just trying to identify them on lower time frames. I mean, for example, I can pretty much eyeball stuff by now. So in this area right here, I can see a shark pattern just by like looking at it. And over time, once you look at the ratios, you're like, okay, this looks like it came up, came down to close to like a 0.5 area. Then you come up to like a 1.13, 1.2, all the way up to a 1.618 for a shark. The shark is when your C goes past your A point here, in between a 1.13 and a 1.618. And then you would look for your 886 down here for PRZ. So you had your 886 here. So this is just on APE recently. This was yesterday, right? Or no, when was this? This is when we're at $3, so I think this is way rewinded. But just an example, this is a shark pattern that we found just by looking on the lower time frame. So you can look on lower time frames and find these harmonic patterns that play and practice on the lower time frames. Doesn't mean you have to take the trade on it, right? But you'll see a lot more patterns form on these lower time frames, and that's just good practice for checking higher time frames. But always remember, those higher time frame harmonics are going to have more influence over price than lower time frame ones. So if you do have like a lower time frame one like this fail, but you have a larger harmonic in play, that one's going to take precedent most of the time over these smaller ones. But these smaller ones can play out with inside that big one. Yeah, so you can also pull a fib with this. So you can actually see how like your 886 here lines up with here. But with the shark pattern, I mean, this is your 100% move. So this is where you'd pin it for this. And your 886 lines up perfect at the 886 here. But the fib is just used to know where these ratios are, right? And help you identify it. So like if you're just looking at this and you're just starting, like you could pull price up to here and you can see, okay, close to a 0.5, so in between 382 and a 0.5 here. So we're looking for a bat or a shark pattern. And then once you do have this, each one's different. To find take profits, once you have a completed pattern like this, you can take from your high to your low point and then take profits on your fib ratios on the way up. Typically that 382.5 are good areas that I like to take trades on. Yeah, I mean, this is just like as price develops here. So for example, if I just paused it here, I don't know if this is going to play out, but you can actually see there's a potential. I think this might be a butterfly. So you have a 786 here, right? So you got your 786, you look at your cheat sheet, okay. Now you're looking for a 1272. So I don't know if this is going to play out at all. This is just me doing it with you. Maybe it doesn't go up to that, but then you wouldn't take the trade if it doesn't hit that D point. And it might not actually hit it, right? So you might not have taken this trade if it doesn't hit. But look at that. So this is just me replaying old charts, bro. And you can actually see how close it came to that 1272. And just fucking nuked from it, right? Yeah, let me do that real quick. From the 1618 area. Let me find the 1618 here. So here. So yeah, you're in the potential reversal zone here. So that's your potential reversal zone here. And how do I? Yeah, so that would have been your potential reversal zone. You could have marked that by having here to here. You would have taken your fib tool. So this, you have your initial D point, right? That's your harmonic completion. Then you also have this BC extension at a 1618 here. So you mark the 1618. That's your potential reversal zone. And then that's when you would play it, and this is the zone you're looking for price to reverse on. Yeah, Bird Dog, I think Conky wanted you to repeat that if you could. Yeah, and then a good example on this too is that I like to look at is past harmonics, like the PRZ. So example here, we have this marked, right? So this is they usually play a significant role in future price action too. So if we played it again, you can actually see how once it does get below this area here and consolidate, how it just rejects off the PRZ from over here, right here. So they do play significant roles in future price action sometimes too. Yeah, man, I typically take higher time frame trades on them. I like 1 hour harmonics. Those are probably some of my favorites because you can get in and out in a couple days or within a couple hours. I think I had an Aptos alert go off earlier. I don't know if it's because I had a harmonic set on it or what, but I'll check it. No, I have a lot of other stuff going on here, but I do have a larger harmonic there on Aptos. I have one on Gala lower too. Let me see if I can go and find like a 1 hour harmonic somewhere just to show you for an example. I'll use, I know Solana had one that filled. I think Ocean had like a bearish one. Recently. I think there's a Gartley here. So I mean this is a 4 hour, but same thing. 1 hour, 4 hour, very close. So here you have a swing high, swing low. So now you're looking for that B point, right? So you want to find that area in the middle, that's your swing high of all this price. So it's over 618, it's very close. I mean, I think it's still kind of respected it, but you want to have it exact. So this is probably a bad example, but let's pretend this is a 618 here. You have a 618 here. Then you have your 786 up here. And this would have been your reversal area for where you would start to enter or look for shorts on ocean. I mean, you can have it on larger time frames, smaller time frames. Like example, like let's go to, let's see if I have a naked Bitcoin chart here. We'll just use this one. I mean, Bitcoin over here, even on like a daily time frame, had a harmonic before this giant nuke down from like 48K. If you actually go over here, you can actually see, so you have a swing high over here, swing low, you look for the B point. So this one's again a little bit over that 618. Sorry, I kind of butchered that, but very close. We'll just say it's a 618 just for an example here. You look for your in between a 382 and an 886, so you're in there, you're like right at the 886. Then you look for your 786 here. So you'd have your 786 that you could mark off. You would take your fib. You're looking for the 1272 here. Which is like right here. So you can mark that off on the Gartley. And this is your potential reversal zone here for Bitcoin on a daily time frame. You can actually see you came in, you completed the harmonic pattern on a daily time frame, and then fell from the Gartley there. You can look at current price action now. You have a daily one, daily shark here. Got a 0.5. In between a 1.13 and a 1618, you're actually like right at the 1272. And then you take this up to an 886. And this completed here. And then you go ahead and actually take the fib from here to here. You look for that 1618. So you can mark off your 1618 here. It's your PRZ, potential reversal zone for a bearish shark harmonic here. And if you would have taken your initial trade, I mean, it had entered at the D point, there's like a 19% move down on it. And we're currently fading below it now. You really want to see this start to come up if you're bullish and get above and find support above this. Expiration of the D point. Well, yeah, it could have effect on price action later. I know Scott, I think he does 30 bars. Bird Dog, does he do 30? And you look for like a 3-bar pattern within here too, if I'm not mistaken. Yeah. Yeah. Yeah, so like Harmonic doesn't predict time. So like for example, you have the C point and you're looking for this D point. Everything in between this like is noise. Like that it doesn't say how long it's going to take to get there or anything like that. That's when you can try to factor in some other things for time, but it just predicts price movements. It doesn't predict time.
That's something I was probably just there's a lot of big conceptualization of robotics. I think getting frustrated when everyone's not clear overlap.
Yeah, they're not made to have time on them typically.
If you move over, you like have to do this by, usually don't get the long draw and they stop the machine. That's what.
But yep, other than that, I mean, I think this is going to conclude the first lesson that I had so far for you guys, just to go over some of the basics. I hope it helped. If you guys have any questions, feel free to ask in like main chat, or I can always open up like a separate chat for now, just for anybody that attended, and you guys can ask questions in there. Maybe I'll just make a chat like in the lounge that'll say Harmonic questions or something like that. But I think this should give you a good start. Let me, before we get off here, I'm going to take some of these. Since you're in here, it's private VC, I'm just going to like, just go into cheat sheets, and there's a lot of Harmonic cheat sheets in there, man. Let me, of course, and I'll try to get the video uploaded too. I don't know if I'll be able to get it up tonight, but I'll try to get that uploaded for you guys. All right, cool guys. I'm gonna head out. So thanks, guys. See ya. Cheers.